Hello, good morning and welcome. My name's Adam Keith. I'm the Dallas Market Manager for BizNow. And welcome to today's webinar, The Future of Student Housing and Where Will Industry Go Next? I'd like to thank everybody for attending today's webinar in these challenging times, but hopefully the future is just around the corner and we've got happier days ahead. Before I introduce the speakers, we've got a bit of housekeeping. Everybody will notice that at the bottom of your, well, first of all, we can't see you, cameras off, you're all on mute. That's so that if you've got some chaps like I have constructing a new fence outside your office window, that won't be a problem. So if you want to wander around in your pajamas or whatever, that's absolutely fine. If you've got a young child that comes in and does a robot impression, absolutely fine as well. As I say, look at the bottom of your screens. We've got the chat, we've got the question and answer. We will be taking some questions from the audience at the end of the webinar, and we would love for you to please give us questions while it's going on. Obviously, you know, the questions, no one here has a crystal ball about when COVID's going to end, and obviously, you know, JLL can't talk about what deals they've got in the pipeline, and Houston, you know, aren't going to know what office times they've got. But you know, other questions, please, we do encourage you to ask them. At the end of the questions, I'll also be asking you what soundtrack was that track from, what movie score, not what was a track, but what movie score was that music from. With that, I'm thrilled to announce today's speakers. We've got David Kenny, President of Lincoln Ventures, Anthony P, Tony P, Director of Residential Life at the University of Houston, Justin Granley, Director and Head of Education Real Estate at Harrison Street, Roger Phillips, CEO of Texler Housing Partners, and our esteemed moderator today, Teddy Leatherman of Student Housing Capital Markets JLL. So with that, Teddy, it's over to you. If you could unmute yourself, Teddy. Down to the bottom left, Teddy. Brilliant, thank you.
Can you hear me now?
Are we good? Yes, ma'am, thank you.
Okay, great. Hi, everyone. This is Teddy Leatherman with JLL Capital Markets. I'm thrilled and honored to be here today with such an incredible group of panelists. First and foremost, I hope everyone out there is healthy and as happy as they can be in these uncertain times. I'm going to kick things off with a quick capital markets overview pertaining to student housing. I will briefly talk about past recessions and how we've historically seen real estate rebound after an economic trough. And then I will give a brief overview of what we're seeing in terms of foreign and global investment. So first, going back to capital markets, based on our BOV activity in Q1, we expected this to be a very heavy sales transaction volume year. Our team had roughly 60 active student housing BOVs that were likely going to go to market. And while we're facing these short-term headwinds, the majority of those sales transactions have been put on pause. And our team has been very active in the joint venture equity placement business. So the majority of those are for construction student housing deals. And what I would say is, you know, pre-COVID, there was so much capital for student housing. You didn't have to get that creative when it came to a JV, but post-COVID, we've had to come up with some pretty creative structures in order to get these deals done. So now going to investment sales and what we've seen from pricing, you know, it's too soon to tell. And as I mentioned before, the majority of our sales transactions have been put on pause, but the discount for post-COVID pricing has been somewhere between 7 and 12%. And that is driven 1/3 by capital markets, so the cost of capital, and 2/3 by changes in underwriting. Now, with regards to debt, there's still liquidity in the debt markets. However, the big question is at what leverage and what reserves is the lender going to acquire? So right now for reserves, we're typically seeing somewhere between 12 and 18 months. And that equates to roughly 10% of additional equity that a sponsor is going to have to put up just for the debt. So a couple stats that I wanted to highlight that I pulled from our national debt team is 90% of the bank deals we have executed over the past 2 months have been from local and regional banks. So that's relationship lending. On March 15th, 50% of all of our debt quotes were for housing product. And on April 1st, that number increased to 70%. And 63% of all deals we put under application since March 15th have been housing, 43% of those through the agencies and 30% through the banks. So now I'm going to briefly talk about how we've historically seen real estate rebound following an economic trough. So 12 to 24 months following a recession, you see a decrease in starts and deliveries for student housing and housing in general. And in the latter half of that time frame is when you start to see liquidity and employment growth begin to return into the market. So it's no surprise that you typically see Class A properties experience the first wave of rent growth, followed by Class B and Class C. And I should have prefaced this by saying that none of us have a crystal ball. I'm not an economist. We don't know what's going to happen in the future, but all we can do is look back in history and at historical data points to help us predict what might happen in the future. The other point I'd like to make with regards to COVID is that past recessions have been gradual, meaning a gradual decline followed by an even longer recovery. Now with COVID, we've experienced a very sharp contraction. So we're now 2 months in, and the contraction thus far has been steeper than any recession in history. So what we're hoping for is what economists refer to as a V-shaped recession. So a sharp decline followed by a steep recovery. Now, that might be in the more of a shape of a U, so an even more gradual recovery. And some are even thinking it might be a W. So, once the economy opens back up, if there are more cases of COVID within the US, you might see the economy dip again. But again, we're kind of in the wait and see mode, and none of us know what's going to happen in the future. And we're just looking at history and facts. So finally, I will end with a brief spiel on global capital trends. So Korean and German investors were very active in Q1 and going into COVID. Now, since COVID, they've really returned to the gateway markets and defendable asset classes. So those include multi-housing, industrial, data centers, and debts. And what I think is really interesting is we've seen an increase in private global capital. They've been very active now, and those are traditionally the high net worth family offices in other countries. And global groups that have US presence think that they are going to have a first mover advantage. So to them, having domestic representation is a huge advantage for them. And finally, hedging costs have decreased, which allows foreign players to participate in sectors that they have historically been priced out of. So I will pause there and I will turn it over to our panelists. I will ask the first question, which is, what changes can we expect on campus fall 2020?
I'll take a shot at that, I guess, and then maybe see what Antonio thinks, since he's really in the weeds on this much more than I am. But reading the Chronicle and I guess been in the student space for 20 years, and you could set your watch, your clock, and everything you had by the schedules they have. They've been tried and tested for centuries, and now we're in this uncharted water condition. And I turn to the Chronicle of Higher Education every day to see what kind of what are the latest news reports coming out of some of the various institutions around the country. This morning's actually had a one where the Dean of Enrollment Management at Pepperdine commented that for them, this fall is seen, they're basically truly flying blind here. I mean, and I think that's kind of the case for all. I think this is going to it's going to touch on so many different areas of their business. I mean, at the end of the day, these are all businesses, they're enterprises, and the strong I think the strong will survive, and those that have been struggling, may not make it. But regardless, I think they're conservative. And I think they've got to look at this and say, okay, what do we have to do to make sure our students and their parents feel that they're safe on a various number of levels. So I see, and I see classes being different. I see, things like maybe they're staggering days by level of, freshmen, sophomore, juniors. Maybe they're attending in on campus different times of the week, different hours of the day. Doesn't even touch into what the residence hall situation might be, which they're going to be challenged like the rest of us with, spacing and, what does a traditional dorm look like now? I think those are all things that, I have to say that probably every university out there is going through this, 18, 20, 24 hours a day and trying to figure it out as best they can before having to make formal announcements. Some have to make them sooner than others. I think their peer institutions, they fear their peer institutions might put a news report out there that says we're doing something and they've got to follow. So, these are times that I don't think, even at the higher ed within the university level, I don't think they know exactly what it's going to look like. They just know it's going to be different. I just read again today where University of South Carolina had reported that in their fall calendar, that they're going to start in person, but after the Thanksgiving break, they're going online for the rest of the semester. So, a hybrid. I think that's going to be, I think you could kind of blanket that with all things on campus. It's going to be a hybrid as best they can, but they have to survive, and they've got to have revenue, so they can't just close the doors.
Yeah, I totally agree with everything that you were saying. It's a lot of uncertainty that's happening right now on the campuses, and administrators are running 4, 5, 6, 7 different scenarios of how we get to a successful semester with safe students and keeps the enterprise financially viable. So I agree that probably in the next month or so, you'll begin to see, at least in the state of Texas, you'll begin to see flagships roll out their thought process of how they're going to move towards the fall. And I think for a lot of us, it will be some sort of hybrid, whether it's for a single institution or a system of institutions. It just depends on what the leadership is working towards. Like we saw earlier last week, the Cal State system announced how its 23 institutions were going, and I think that put a lot of pressure on higher education collectively to try to figure out what's happening. But I'm encouraged that the state of Texas in particular is opening up. I'm encouraged by looking at the reports that student confidence in returning to campus has returned to the levels that it has before COVID-19. Carnegie Dartlet put out a report at the end of last week that talked about students are really looking forward to it. And we can talk about it from a data standpoint, or we can talk about it anecdotally. Students are tired of being home. They're ready to get back to some sense of normalcy, or they are ready to begin the college experiences that they've talked about and dreamed about for some time. So I'm hopeful that while our future will look different, it may not be at the same capacity in this next year that it has been beforehand. I think that if we prepare well in whatever hybrid or what it's going to look like, I think we'll be able to sustain and survive.
Great. The next question, how are investors and lenders reacting to the uncertainty around student housing? Are deals still getting done?
I can take that one, Teddy. Thank you. This is Justin Gromley from Harrison Street. First off, thanks everyone for hosting this, and thanks for prompting me to wear a collared shirt for the first time in a couple weeks. That's a welcome change. Yeah, on the investor and lender side, I'll give you a couple of different facets of this one. One, in talking to our group of investors that capitalize our open and closed end funds, the question we are getting asked on every transaction, and we are still closing on acquisitions, still capitalizing developments, still diligencing assets and putting things under contract. But the question we get asked is, why this deal? Why now? Are we being compensated for the additional risk, even if it's only perceived? Are we adequately protecting our downside? Are we taking on undue risk? So, that from a transaction standpoint, I would say this couple month period is a tough one because, as you heard the guys just talk about, there is just so much uncertainty as it relates to schools opening up. And even as they announce that they intend to open up, does that mean that all the students are going to be there? Does that mean that the students who have signed a lease are going to show up, or do you have potential for greater skips? So I think you've got some jockeying between buyers and sellers about who's going to bear that risk. And I think that will and has artificially held down sales volume during this time, right now. So I think once we get to fall, that immediate concern may go away. You're going to have the new concern of what does enrollment look like. But we are still actively, pursuing deals. On the development side, I think, things are a little different. I think one of the benefits there is that you're effectively leapfrogging a couple of years of enrollment data to a point where it's going to be a little more stable, or at least feel a little more normal. So that's been attractive to us. The limit there is on the lender side, and I wouldn't say that it's a student housing issue as much as it is just a limited lending capacity issue right now. And maybe groups can get their 2 or 3 best banks to step up, their best relationships to step up and capitalize a handful of deals. But that's only going to be the strongest development groups. It's only going to be the strongest sponsors and LPs that are able to get that done. So we think there's going to be a pretty dramatic fall off in development, not for this fall, obviously, and probably not for next fall, except to the extent that things are late. But really in that fall of 2022, we think we're going to be looking at, somewhere from half to 2/3 of the historical volume that gets delivered around campus. So call it 24,000 to 36,000 beds versus what we've historically seen in the 45 to 50,000 range.
Yeah, and Justin, that's historically what we've seen in past economic recessions. 12 to 24 months following an economic trough is when you see the decrease in starts and deliveries. And I agree with what you're saying. And I would add, across all capital markets, we're seeing this flight to quality. So they want tier 1 schools, best in class operators, and phenomenal locations. So Justin, follow-up question to that: is student housing still considered a safe asset class to invest in? Do opportunities exist for the underutilized assets?
Yeah, so I think with respect to the first part, I think the way this is all going to be framed, and the way we started this recession and pandemic has really kind of loomed large in people's memories, right? So the first thing that made this real for a lot of people was schools closing, sending kids home, NCAA tournament getting canceled. That's what resonated with people and made people think, oh, wow, this is probably something that's seriously going to impact my life. And then all of the CRE folks immediately jumped to, all right, well, how is this going to impact student housing? And is this potentially a real concern for the industry? And what we've seen, and I got to say, I've kind of shared those concerns just back in early March. It was certainly something on our radar. What we've seen over the last couple months is collections in our portfolio come in over 95% in April, and trending the same way for May, both of which are higher than what we've been able to see on the conventional multifamily side. So, I would say that obviously people want to make absolute returns, but I think we are positioned to be relatively strong, as we have been through previous recessions. The rubber's going to meet the road come fall, and I think your flight to quality is a good statement. And I think that is really going to come to pass as it relates to institutions. So at Harrison Street, the focus is on, institutions that we believe can maintain and grow their enrollment. So what's that mean? It means they are selective, or they are geographically located in an advantaged way. So whether that's, increased high school graduation rates, demographic trends, or being proximate to a large MSA, where they can, pull students from and put kids into really good jobs, so they can have good outcomes and use that as a way to market and differentiate themselves as compared to their university peers. And then I'm not sure what you meant for underutilized assets, but I will take a moment to just kind of mention that I think one of the biggest things that people are still just trying to get their arms around is the concept of de-densification on campus and how that may reverberate on and off campus through the market, particularly with this year, what's going to be a really late surge to fill everything up if kids decide to move back to campus in a meaningful way.
That's great intel. And I know we have a couple other operators on the call, and I'd like to briefly talk about April and May collections. Justin, you said that your collections were stronger than expected. Roger, did you experience the same?
Yes, I think we were hoping for the best, but trying to plan for the worst, and it actually exceeded, I think, any of our expectations. We were, I think, in our collections, averaging, I would say, 95 and maybe even a little stronger in May, which was, very, very good. Obviously, a great reception for.
Great. So next question, how will colleges recover from coronavirus? What will it take for students to feel safe on campus? Antonio, do you want to take that?
Sure. I don't know. I think it's how they will recover is an individual question. And I think we've seen some written reports where the flagships will sustain, and I think it depends on institutions' reserves that they've had literally to weather the storm. Plans that they've had, going back to the topic of March, none of us have been through a pandemic before. And so there was literally panic, and sending students home is the best way to not have an outbreak on a campus in a situation that you don't know what's happening. But since March, now we're here going into late May, operators have had the chance to communicate with peers, take a pulse check, look at their orientation numbers, develop plans for the fall. And I think, again, it's reassuring that we do have a plan, and that may be institution or system specific, to handle it. And this is the conversation that I've had with our team. Depending on the state that you might be watching from, your government may impose certain things that the institution, though the institution may be able to do, the state has said that you can't. And so I'll give you an example in the state of Florida, in particular to one of the questions about outbreaks on campus. The state of Florida said, you need to send folks home. Well, that doesn't mean that the operators there don't know how to manage it like we've had the opportunity at the University of Houston. And so we had an isolation plan. We put in a process to communicate and make sure that the students got the health attention in that case. So I think there are strategies that, if this continues in the fall, that some of us have employed. I think you see in some of the hybrid models that some institutions are planning for a second wave. And this is why you see some of the sending students home at the Thanksgiving break, right, just before flu season comes back up, trying to think about and prepare. But again, I think if the on-campus housing, or if the on-campus had great reserves to weather this lower densification, then they're going to continue. And they may take a hit at it, but I think it's in the best interest of the institution and our students.
Great, thank you. So this question is directed towards David. How is construction being affected with regards to timeline, potential delays, cost, and procedures?
Yeah, so good question. It's been a challenge. I think if you look at our products that we're doing right now that we're in construction on, we have probably one of the most dense job sites in all of Austin. Timelines so far have held up. I think we've done a good job at looking and out, basically looking at all of our lines, where materials are coming from, getting ahead of the curve. In Austin, we didn't really miss a beat here because the governor allowed projects that had an affordability component to continue on, which all the projects in West Campus have. So at least we kept that going. But look, it's virtually impossible unless you have 6-foot hallways to maintain social distancing. So we're having to take temperatures of everyone that comes on site, answer questions, go ahead and identify those that have been through all the protocols to actually go onto our job sites. We've had to limit the number of individuals in each unit. If you think about student housing versus core and shell office or other product types, we probably have some of the most tight quarters that people operated in. So we are going above and beyond. Our contractors have done a great job. And some of the other challenges, inspections and dealing with these meetings with the city of Austin virtually and going through typical things that you have face-to-face meetings and adapting with folks that necessarily haven't been up to date with technology and keeping things on schedule. So overall, it's been challenging, but luckily we've had some great success thus far in keeping our timelines and delivering for the fall.
I'll only add to that, Teddy, that we've got a renovation, but just a simple office renovation in Austin going on. And to your point, David, getting like an electrical rough-in inspection took weeks. I mean, we've probably been waiting, I don't know, a month. And this is maybe 1,000 square feet.
Yeah.
But it's just been, kind of, I'm sure chaotic, and just trying to get them pinned down was, unbelievable. So we finally got it, but it's taken, weeks to get. So
yeah, I would say the key is just being very fluid. If you feel like you're working overdrive just to make design decisions, make any last minute changes, you're just making a lot of things on the fly, and you're doing it with a ton of information being thrown at you on a daily basis. So overall, you just got to be able to adapt quickly and, do your best to make sure you communicate very fastly with your entire team.
I think that said across everything in the business, right? Operation, construction, everything.
Yep. I agree with you guys on all of those points. So David, for a follow-up question, how are you navigating risk versus reward?
Risk versus reward, great question. Back to you guys' earlier comments, I think going back to relationships on lending, one of the challenges we have as we look at 2022 deliveries and projects is, choosing the right sites, looking at the projects, looking at the design, looking at everything going into the student housing is location is ideally, you got to start there. We got to look at using our existing relationships on, equity and really the senior piece, which has been really challenging. We've got a couple deals that are all post-COVID trying to get out of the ground. And it's been about 3 times the effort than pre-COVID. So you're leaning on those relationships, you're looking at the upsides, you're going back to the same thing we all think about is what universities are going to have long-term success, where you're putting your investments, making sure, everything you look at, you have to look at as if you're holding indefinite and always put yourself in that long-term holder. And so as long as we're keeping that and not looking at a merchant mentality, I think we'll be fine.
Great. Anyone else have any thoughts on the risk versus reward question?
We just, I guess at a high level, we have over the last, 5 years or maybe longer, have really deliberately gone to invest and work in tier 1 markets for liquidity, for long-term stability. They're going to get hit with, just as every market might get hit with a recession of some sort. We always felt like that was, with the difficulty of these operations, we tried to mitigate, a lot of what we could, and that's one thing we can. I mean, and making the decision just to stay in, tier 1 flagship markets.
Yeah.
But Roger, what's that mean to you? What's a tier 1 market? Because I'm sure there's a pretty wide disparity in experience and familiar with the vernacular. What's that mean to you?
You know, for us, that's flagship institutions in any given state. Now, you know, Texas is unique. California is unique in that, you know, I think of tier one as, you know, a flagship, but Texas has, I don't know, probably a dozen universities that have enrollments that would meet or exceed plenty of states' flagship schools. I mean, UNT versus an LSU, right on par. You know, so I think it's as much of, I guess, traditional would be flagship institution, but I'd probably, I guess, to your point, I would probably look at it, you know, in cases like a Texas system, which is unique to a lot, and say, you know, those that have, you know, stable enrollment, strong, you know, strong and some growth. I mean, so we're just trying to, you know, look at it and say, okay, is Florida a good, you know, is Florida going to be a good long-term play? You know, just to David's point, you got to think, you know, you may go into this thinking you're in it for 1 to 3 years, but end up in it 5. And so, you know, don't want to necessarily go to a Michigan or some other states that don't have quite the enrollment growth of a Texas or a Sun Belt. Antonio, did I do okay?
Yeah, absolutely. Yeah, there's data that was produced some time ago, but there's a lot of graduates coming out of high schools. Texas actually feeds the nation in terms of graduates, and a lot of high schoolers want to remain in Texas. So I think the large systems, and when I think of tier one and I think of flagship, I think of the same thing that you just mentioned. You know, you think of the UH system, the A&M system, Texas State system. There are several institutions that we still will have good enrollment, I think, moving forward. So I think the confidence is there. And when I look at these reports, they're along the demographics of those particular institutions. So it's matching up apples to apples about, you know, student confidence versus what we're seeing in terms of this enrollment numbers. I'm particularly interested to see what will happen with orientations this month that's coming up, because that's usually a big indicator when students complete the orientations about their intent to continue. So yeah.
Hey, Antonio, can I ask you just a quick question with respect to where do you think enrollment goes? And you don't have to speak with any real precision, but when a university is kind of molding its freshman class, I'd be curious to what you think the baseline level of confidence around how many kids, based on how many they let in, will be, and how much that confidence level's changed right now. Because I got to imagine every school, from Harvard down to the lowliest community college, has no idea how to calibrate that toggle now.
Absolutely. And I think when we started making those plans, everyone was expecting a dip and trying to figure out how large of a dip that was going to be. Is it going to be a couple percentage points, or is it going to be, you know, we're going to be wiped out? I think I'm hearing largely that there are scenario plannings of, you know, somewhere up to 5, 10, 15, or 20% collectively across, and no one really knows what's happening. But I think, again, I think the flagships are, you're seeing that. The faster, and this is just my personal thought, I think the faster, more solid plans an institution can lay out about how they plan to proceed and how they plan to mitigate some of the risk along with COVID, I think you're going to see students are going to say, okay, this is as safe as it's going to get. You're going to, and especially speak to parents, right? Because I think in these decisions, parents are still very much there. And I think for all of us, you know, how do we communicate to that wide audience that our properties, that our campuses are a safe place and a safe bet, and that we've got plans in place to handle a future situation, or how to get students home if that happens. So I think a lot of that confidence right now rests with us in figuring out what we're going to do. And I think that will play out into the market, right? Those who are around us, your properties, right, who are very much close or very much tied to the campus, you know, what data can we collect right now that shows intention, data that we shows confirmations to come to campus. The admissions world changed this year with some decisions. So that threw us all off, right? Things that we could count on. So I'm interested to see, but I'm very hopeful.
Cool.
One thing I was going to ask, Antonio, was just going to comment and get your thoughts on too, was I'm sensing, and again, just reading some of these articles on the Chronicle and other places, that these universities are going to get, competitive. By that, I mean, they're going to, aggressively go at students, probably offering, maybe a discount to the tuition rate that might've been in there in the past. And so it's going to be, is it a case of, the strong will survive again? And you've got, again, these flagship institutions that have to get the revenue, and they're going to go at it like no other.
I think you will most definitely see institutions going after students a lot harder than they had been before. I think if you've got the resources to remove barriers to entry across your institutional admissions plate, that you're going to see that happen. I think institutions that can convey what the student experience will be like in this hybrid virtual online engagement that is much still appealing will survive. And so if we're not thinking about, students still want flashy. As much as we see anything else, how are we telling them what we believe their experience is going to be like, and they can find some confidence in that. But I most definitely believe that you're going to see a lot more aggressive tactics in recruiting students, especially once we get through this summer and admissions teams have an opportunity to examine how successful they were in this recruiting class. Yeah, I think most definitely we'll see some changes.
Thanks.
Okay, and thank you so much, guys. And if you could please just stay on, we've got a few really cool questions from the audience. With obviously COVID, with student housing on campus, is anybody seeing with new construction or with remodeling, repurposing of the student housing to be COVID friendly or COVID proof or COVID resistant, with materials, flooring? Are you having to redo any of your buildings to be COVID proofed?
David, did you have to do any rework on your end?
No, I mean, I think what we're doing is not necessarily existing. We're looking to the future of, hey, how do we make things more touchless? Obviously everyone's got their cleaning protocols and a lot of different things that we've talked about numerous times, but going forward, automation, our demographic is probably the quickest to adapt technology over any demographic. So I think we're looking at ways to use mobile devices to access the building, go up and down elevators, touchless door entry, just a lot of things and a lot of opportunities that exist that maybe would have been slower to evolve that will be sped up through this. So nothing on the existing assets per se on physical changes. I think, a lot of the news that's come out about double ups, kind of seeing how that plays out on campus, off campus is going to be interesting to watch. But from a going forward, it's more of using technology to help automate and create less touch points.
Yeah, I think, Adam, for us, I'd say to David's point, I mean, for us and what we own and manage now, it's requiring and forcing us to think about, how many places do you touch in a day? It's the gym door, it's the office door, it's the exit door of the building, it's the entry, it's all these places, elevators. And so now we're having to retrace every step and think about, one, can we make it touchless? Two, we've got to keep it clean. So it's, and sanitized. So, I mean, it's making us rethink, every piece of the operation from, the room they're in, the unit they're in, and the space that they're, taking advantage of and utilizing across the property. So it's unreal challenge.
Yeah, no, of course, that's right. It's all these pathogens, are they airborne, surface borne? It's a new world order. That brings a segue to another question from a member of the audience. Gyms, how's that going to be affected in schools moving forwards?
I think we have gyms in our residential facilities or fitness centers, right? Let me get the appropriate language right. Gyms in a different connotation, but we have stocked cleaning supplies and instructions with appropriate cleaning supplies for folks to self-clean, just like you would at a normal gym any other time, right? Expect that same thing to happen. And we're walking through levels of social distancing strategies, right? As we saw that happened in the state, right? As we move through this process, at a certain point, we may, if we get deep into this again, we may close it down, but it's, it's a good resource, right? So we want to try to keep it open as much as possible.
Yeah, and we've had quite a few questions actually about, and it may be too soon for you to be able to answer, but leasing, pre-leasing for student housing, are you seeing a drop last year to this year, or is that too soon to say?
Ours has been remarkable. I mean, we've got some assets that are actually outperforming last year. I mean, it's pushed, again, we were forced into these new conditions of virtual tours and, closing the office. I mean, fortunately, I think most of us are doing online leasing. And so we had all the ability to do all the documentation. It was now, can you sell it without somebody seeing it? And it's proven that we can. And so just as our collections were, I think better than what we might have expected, our leasing is exceeding what we expected. So, we'd love to have the offices back open again and go in full steam, but it seems to be working thus far.
And
I would just add that we're, we started off COVID probably 2% ahead across our portfolio. And then I would say that our velocity was cut roughly in half at the outset, just by virtue of kids not being on campus. So that's led us to fall slightly behind the mark at this point in time on a same store basis in the 300 basis points range behind, which isn't ideal where we'd want to be. But I think given the fact that we haven't lost velocity to our competitors, we haven't really given away incentives. Everyone kind of realizes we're all going to hold the line, and effectively kids just need clarity on the academic year. We believe there'll be a lot of leasing very late as that clarity comes into focus. The question is going to be, how much does the school open up to allow the same density on campus they had before? The other question is how much of what we typically call the shadow market, so the single family rental homes, the smaller 20 unit or so apartment buildings, how much are they able to lease late in that scale, which is not something they've historically done, certainly not remotely. How much are they going to be able to maintain their market share? But depending on those two factors, I think there's a case that this may be one of the better occupied years in tier 1 markets. So we're behind, but we feel okay, all things considered.
And again, people are asking, that leads us to virtual tours. Have you guys been doing virtual tours of campuses? I mean, I know it's getting bigger with office leasing and stuff now. Is that something that colleges or student housing are looking to do?
Yeah, we've but that's a space we've been in beforehand, the virtual tours. We would love to have students come to campus, right? That nothing replaces the human touch and being able to interact in a human face-to-face, making you feel safe and secure on a campus or in a space. But I think students are enjoying what we've put out and what we've produced, looking at what other types of publications or virtual things that we can put out there for them to take a look at, just to diversify what we've had so far. But it's been working.
Cool. Okay. And then somebody said, Adam, is it too early for a pina colada? Probably yes, but that's nothing to do with student housing, more the frat parties afterwards or whatever. That brings to a good point though with Teddy. With the obviously there have been maybe delays in the construction. David said he'd been okay. They were on target to finish okay. But have you had people with the capital stack side of things coming to you saying we need a bit more time with the financing of the student housing and stuff?
So I would say a lot of lenders, even if you start the process now, they don't want to close until you have heads on beds this fall. But again, in terms of debt, the two major things that have changed would be the DSCR, so their debt service coverage ratio is closer to a 1.3 or a 1.35, and then reserves. So 12 to 18 months is what we're typically seeing, and that equates to roughly 10% in additional equity for an opportunity.
Okay. Forgive me, I'm just looking through here. So do you think that there's going to be, do you think online, and this is obviously the £500 gorilla in the room, especially with all of you guys, but do you think there's going to be more traction now in online learning rather than people going to campus?
I don't know. I believe students, I don't know. I think what it has done, has pressed us as institutions to figure out the online environment a lot faster than the pace was growing already. I think that's for sure. I think students still desire very strongly an on-campus experience. And I think given a multitude of factors, it behooves us to figure out how to make that happen, because that desire is still there. It's very strong. It's one of the drivers that we know of student success. When I look at those metrics, that being on campus or very near to campus helps with that success. We don't have, in some ways, large sets of data that talk about students' overall success in the online space. There's some, but not a substantial amount that's been written about living on campus or in an adjacent property. So I hope we get back to that space and we continue to put our heads together, both the public and private markets, to figure out how do we make this happen collectively to get back to a space that we can operate as close to normal as possible in a new space, if that's aspirational.
Yeah, and dorms, people having shared rooms over individual rooms. Is that something that's viable and realistic for the future still?
I believe the association ACHA released a report that talked about corridor style community bath residence halls, which don't have a private restroom inside there. They gave us some cleaning standards, to increase and lower the occupancy numbers, and that those may be okay. I think a lot of folks are toying with the single occupancy that still allow for those types of residence halls, because there are some campuses that don't have apartment style. And some here in the state of Texas, where when they look at their own numbers, they've seen that these styles contributed to student success. So I think they too are trying to figure out, how do we keep students in the residence halls where there are community style bathrooms, and we lower that risk as much as possible. So I don't know, but again, that depends on a president or our government, which hasn't weighed in, right? A institution's chancellor or president, or to say, hey, this is what we're willing to allow you to do. So I've been pleased that Governor Abbott and his team haven't been as aggressive as some other places, because it has allowed us to move forward in some ways that some of my colleagues and peers across the country haven't been able to. So I think, again, we'll see, but I think I would expect some sort of single occupancy, lower densification in communities.
Great. And then what I'd like to do towards the end of these webinars, I always like to give people, and I'm sure you all do, to give people a little bit of hope. Teddy, what do you think? What advice would you give to anybody in student, housing or in the industry now for the future?
Well, that's a bit of a loaded question, but I would say my personal opinion is I think that students really value, an in-person college experience. And I really hope that we see that through this COVID crisis. I will say there is still liquidity in the debt markets and, ample equity that's willing to invest in student housing. As I mentioned before, you might have to get a bit more creative post-COVID because, as opposed to pre-COVID, but there's definitely still liquidity in the markets. And I'm hoping that as schools finalize their plans for this fall, we'll start to see transaction volume pick up as well.
Cool. And Roger?
I think it's going to come to the other side of this is going to be different, but I don't see there's been a change in a shift away from, not wanting to go to, a college and university. I think it's just going to, it may be short term, maybe long term that, it's going to, maybe you're not, if you're in Texas, you stay in Texas and you don't go to, a California school or something. It's just I think it's going to shake out differently. And again, I think the weaker institutions may not make this. It may require some consolidation. I think those conversations were probably already happening in some states and some institutions, and I think it's going to force that to happen. But, it doesn't mean they still can't get the experience and the, and get the curriculum that they were hoping for. I think it's just, it may not be exactly where they expected to have that.
Yeah. And David, your ray of hope or ray of sunlight, should I say?
Yeah, I think experience is really important. That's first and foremost. I think value of hope, one thing we forget to talk about is the demographic that we're housing has vastly not been impacted as several other demographics. I think that we should keep that in the forefront of our minds as we talk about all these things we should or shouldn't do. We have over 75 students at UT that work for us, and we talk to them all the time. And there seems to be a little bit of a gap between the way maybe some older folks would react to the situation, the way they're reacting. So I always try to put myself in the student's mind and think about what we can do to make their experience better. And I think as we talk more and more with the students and what they're thinking, I think there's a lot of hope. I just don't see maybe the impacts being as great with the data that's come out with this demographic. So I think that gives us a reason to have some pretty good hope going forward.
Cool. And Justin, where are you looking?
Sure. So I think, for my green shoots here, one, we're in a recession, right? So I think that what you've seen, if you look at the GFC, is that student housing is going to perform well in a recession because you're going to have more people go back to school. You're going to have enrollment maintained stable. What we saw coming out of the GFC is that you have a profound impact on your career earnings if you have a higher degree from higher ed. I think we've got green shoots as it relates to our collections outpacing conventional multifamily. Nothing directly, acutely shut down that impacted multifamily. Schools shut down, and our residents paid more than at-large people in multifamily. So I think that's important to keep in mind. And lastly, I think it's important to remember it's a relative game. And in a real estate world where there are going to be clear winners and losers, the better we can stack up against office, the better we can stack up against conventional multifamily that got their occupancies boosted by Airbnb and all kinds of other things, the better we'll look coming out of this thing. And you may not be able to, get rich on the return you make in a recessionary environment, but you should be able to capitalize the next deal easier.
Cool. And Antonio?
Yeah, give it time. Just give it time. No one has gone through a pandemic before, and I know that there are some parents who are watching. You're looking for answers that we are trying to develop, and so give the institutions time to figure this out. And I think all of us want students to come back to campus. That's the experience that we want. How do we do that, and how do we do it safely? Again, you talked about the demographics and the number. The confidence is there. I think we're in a good place with our plans to try to get students back to campus as safely as possible, and think about what happens in the future down the line. So give it a little time. Don't make rash decisions to say you're not going to enroll or you're not going to come to campus just yet. Just pump the brakes a little bit, breathe a little bit, give us some time, and I believe your institutions and partners will communicate with you at an appropriate time when they have it. That's both timely for you and for them. So that's my hope.
And that's a good hope to have, Antonio. Roger, did you actually guess what movie track the track was from earlier? It was AC/DC, that Australian band.
I'd have to get, I don't know. I mean, Meatloaf, I don't know what the.
Well, it was AC/DC, School of Rock. You see, student housing, school, it was so, they're very clever. They're much smarter than me. I would like to thank all of you for being on this panel. There's now a huge virtual round of applause for all of you, but thank you. Thank you so much for being here. We wish you and your families all stay safe and well in these challenging times. And hopefully you can join us for our other webinars. Thursday, we've got Artemio de la Vega, who is famous for the Leaning Tower of Dallas, here in Dallas on one of our webinars. But I want to thank you guys. I want to thank Texler Housing for underwriting this event so we could put it on and bringing this great information that everybody got to. I think we got to 90% of the questions. If we didn't, please feel free to email in. And this webinar will be available online for, the foreseeable future. I would say forever, but who knows, right? But for the foreseeable future. So thank you so much, Teddy, Roger, David, Justin, and Antonio. Thank you so much. Have a great day, guys.
Thank you. Thank you.
Thanks all.
Thanks.